Hello and welcome to another video in accounting. In this video we are going to discuss non-current assets. Non-current assets are an important part of the balance sheet. They are usually a very big investment for the businesses. So let's look at what they are. Here are two groups of assets. Let's identify the differences between these two groups of assets. One way of looking at the difference is to ask ourselves a question: how long are they going to be used by the businesses? In other words, how long are they going to provide benefits to the business? Now, Group A assets provide benefits to the business for a short period of time, that is less than a year. Take the example of supplies. Supplies include pen, paper, folders, printing paper, sticky notes, and so on. Now these are used by the business for a short period of time and need to be replaced regularly. So the benefits from supplies is for a short period of time. Group B assets are used for a long period of time, that is many years. For example, building is used by the business for a number of years. So the benefits from building will be for a long period of time. If the benefits are for a short period of time, those assets are known as current assets. However, if the benefits are for a number of years, we call them non-current assets. So let's look into non-current assets more specifically. Non-current assets are ones that are used in the production of goods or in the supply of services. Businesses use them in making other products with them, or use them in providing the services to customers, for example. These include machines, plant and equipment, and vehicles. Non-current assets will also be used for administration purposes. So we could see them in the form of computers, printers, furniture, and vehicle. A major part of non-current asset is the tangible non-current assets. Now these are assets that we can see and touch. Now a major part of the tangible asset is property, plant and equipment, known as the PPE. So let's look at what PPE is. Here are a few examples of PPE. First, land. Land, of course, means the building sites. They also include land improvement. So PPE will include things like driveways, parking lots, fences, and sprinkling system for the land. Those are known as the land improvement. You have buildings, that is another example of PPE. So they will be stores, offices, vehicles, and warehouses. And finally, PPE includes equipment. Now this is a broad category. It includes almost everything else. So computer equipment, furniture, delivery equipment, cash register, any electrical equipment, and so on. Now these are some examples of PPE or broad categories of PPE. So if somebody asks you what PPE are, you could say they include land, land improvement, building, and equipment. Now, let's see how they are shown on the balance sheet. Here's an example of Toyota Motors balance sheet, the assets section of the balance sheet. So you can see that Toyota Motors list these assets, their property, plant, equipment, and include land, building, machinery equipment, vehicle and equipment, construction in progress. And you can see that they represent a major investment for the Toyota Motors. And you can also see that Toyota Motors lists those assets, the property, plant, and equipment, at cost. So that's one example. Some businesses will include property, plant, and equipment on net basis. So here is an example of Home Depot, which includes its PPE at net. So you can see this again represents a very big investment for the business. So let's discuss what the accounting is for PPE. When we talk about accounting for PPE, we will be doing accounting for three things. First, that is the acquisition, then the usage of the assets, and finally the disposal of that. So here, acquisition of the assets, then we are going to obviously use this asset in the production of goods or and for admin purposes. And finally, after we have used them, they will be sold for. So all of these require accounting consideration. That is, we need to record them in every stage of the asset. So acquisition includes measuring and recording the cost. The first thing is we need to determine how much is the cost of the asset and then record that. Usage includes after we have purchased non-current assets, there could be money spent on it to improve that non-current assets. We call them subsequent expenditure. So money spent after the purchase of the asset is known as subsequent expenditure. And there could be allocating of the cost of the asset because we are using the asset. This is known as depreciation. There is 4 videos on depreciation on the channel. Now in those videos we talk about what depreciation is and the different methods of depreciation. So you can watch those videos on this. And finally, we have to dispose of the asset that will result in a gain or loss on the disposal. And we need to do accounting for that. So the accounting for non-current assets include 3 things. What should we do at the acquisition? That is, we need to measure and record. When we put the asset into use and if we spend money on it more, that would be subsequent expenditure. And as we are using the asset, that will get depreciated. How to do the accounting for that. And finally, when we sell it, what would be the gain and loss on that. Let's look at the first part of it, that is the acquisition of part of it. Acquisition part of the non-current asset includes first measuring the cost, that is trying to find what is the cost of this asset. Remember, the cost of the asset includes the purchase price, whatever you paid for the asset itself. Now it also includes all other costs that are necessary to prepare the asset for usage or to deliver or bring the asset to the location where it needs to be used. So the second category includes all other costs that are necessary to make or put the asset in the usable condition. Here example of the land and building. Now the land and building could include the purchase price, say 150,000. That is the purchase price. Now land and building could include all other costs also, which would be necessary to be able to make use of this land and building. Now they could include non-refundable taxes, surveying fees, title transfer fee, title insurance cost, and legal and real estate fees. Now all of these are known as all other costs that are necessary for the asset delivery or intended use. We need to pay for these all other costs other than the purchase cost so that we are able to put this asset in a condition that we are able to use them. So for example, if you don't buy any title insurance or don't buy title transfer fees, the asset might not be in the usable situation. So that's one example of it. Another example of measuring the cost is for the equipment, which is another broad category and includes almost every other thing in the business. So again, they will include the purchase price and then all other costs that are necessary to prepare this asset for its usage. So they could include any non-refundable taxes again, any import fees, installation and testing of these items, transportation cost obviously, any buying agent costs again. So again, there is a purchase cost and all other costs that are necessary to bring the asset into the condition in which the business can use them. Now these assets are and must be included in the cost of the asset. So the cost of the asset just does not include the purchase price, it also includes other costs. So you need to add those as well because these are necessary. For example, you need installation and testing costs so that you are able to use this asset. You need transportation to bring the asset to the location where you need it. So you need to add these costs in the purchase price to measure the total cost of this asset. Once the cost of this asset is determined, it is time to record it. So once we determine the cost of the asset, we need to record it as an asset. So recording is to debit the asset account, whatever that you have purchased, property, plant and equipment. So it could be land and building, it could be land improvement, could be equipment, for example. In this case, equipment would be debited. Either cash or accounts payable will be credited depending on the type of transaction. So an asset account is debited and a cash account or accounts payable will be credited. That's how we record it. Sometimes we purchase two assets for a single price. And if this happens, we need to determine the cost of each asset separately using the fair value method. Here's an example. Now here you could see that there is land in this asset and there is this building or property. Both have been purchased for $2 million. Now both need to be recorded separately. One reason for recording them separately is that building will be depreciated, but land, however, will not be depreciated. Therefore, we need to record them separately as well. Now we use the fair value method for that. So for example, the fair value of the land would become 1.5 million. So debit that. And the building would be 500,000. We will debit that. And a credit will obviously go to either cash or accounts payable. So when you buy two assets, we call this, when we buy two assets for a single price, we call it a basket purchase. And when that happens, remember to record each of the assets separately using the fair value method. Okay, so we are done with the first one, that is measuring and recording the cost. Let's look at the subsequent expenditure and allocating cost. Again, allocating cost, we already have videos on depreciation on the channel, so make sure you watch them. We'll talk about the subsequent expenditure in this next topic. Disposals, we have another video on this, so do watch that as well. What is subsequent expenditure? Now, subsequent expenditure means cost incurred after the acquisition of assets. When an asset is purchased, there might be more money spent on that asset later on as in the asset life. Now we call that subsequent expenditure. For example, you might purchase a vehicle and after using them for some time, you might want to tune up, spend money on the oil changes, tune up, or you might spend money on removing the whole engine or replacing the whole engine. Now we call that money spent subsequent expenditure. So the question for us is so what is that subsequent expenditure and how to record it? Now, subsequent expenditure would be costs that extend the life of the asset. The money spent can increase the productivity of the asset, or they could be the costs that maintain the asset in good operating condition. So whenever a business spends money, it will either extend the life of the asset, increase its productivity, or it will maintain the asset in good operating condition. If it does the first one, we call that capital expenditure, and that need to be recorded as an asset. So for example, if there is a major change in the asset, money spent to change the asset in a significant way where the life of the asset increases or its efficiency improves, we will call that capital expenditure and record this as an asset. On the other hand, money spent to keep the asset in the good operating conditions, for example, for a car, it will be tune-ups in oil changes, brake replacement, and so on. These are necessary for keeping the asset in operating condition. We call those revenue expenditure. Now these will be expensed and recorded in the appropriate expense account. That is the capital expenditure here. So finally, once more, we have acquisition. That means measuring and recording the cost of the asset. We have subsequent expenditure, money spent after acquisition. We need to know whether it's a capital expenditure or a revenue expenditure. And then we have allocating of the cost of the asset, which is depreciation. And finally, we need to record the disposal of the assets. So this was an introduction to non-current assets, and hope that you understood this video. Do watch this video again and share with friends. Don't forget to like, subscribe to the channel and click the notification icon to be aware of the future videos. I will see you in the next video.